I will now briefly review the issues for today: promoting economic growth, immigration policy, targeting disease, Social Security optionality, and tax policy. Turning to economic growth. The most serious challenge facing the nation is restoring a more robust growth rate. In recent years, we have become mired in a low growth trajectory. The resulting costs are immense: fewer good jobs, a growing deficit, crumbling infrastructure, stagnant wages, a widening wealth gap, a shrinking military, diminishing opportunity to support the environment, and less American influence abroad. Virtually every major national objective is touched by this poor economic performance. As such, improving our growth rate is this nation's #1 problem. The good news is that even small differences in growth rates make large differences when compounded through time. Thus, to move from a 2% growth rate to a 4% growth rate will make the nation as a whole 62% richer than it would otherwise be in just 25 years. In a generation, 50 years, the nation as a whole would be 164% richer at the 4% rate than at the 2% rate. The rate of sustained economic growth matters. Though economics, like all social sciences, can be fuzzy at the edges, we know generally what works to promote growth and what works to retard growth. Lower taxes, particularly income and corporate taxes, profoundly affecting incentives to work and save, encourage growth. Higher taxes depress growth. Higher taxes on dividends and capital gains doubly suppress growth in depressing savings and investment. While environmental safety and other regulations are necessary to address market externalities, excessive regulation depresses growth. High-quality education encourages growth. Reducing trade barriers enhances growth, though America needs much stronger engagement with China and others on non-tariff barriers such as antitrust used by our trading partners to reduce the competitiveness of American companies. Facilitating small business encourages growth, as small business is in reality the large backbone of the economy. Facilitating women's access to the workforce encourages growth. Repairing our crumbling infrastructure would enhance efficiency and encourage growth. And a climate of economic uncertainty or perceived governmental hostility to business, including populist attacks on Wall Street, can retard the animal spirits necessary for innovation. The deficit and the national debt are critical problems. So too is the serious underfunding of our defense and foreign policy establishments. Both problems are joined at the hip with the growth problem. For enhancing the national growth rate to generate substantially increased revenues is the only good answer to these and many other national problems arising from our serious fiscal problems. The paper by John H. Cochran on economic growth addresses more fully how our nation can meet its critical need of enhancing growth. John Cochran is one of the top economists in the nation on promoting growth. I would urge anyone interested in this issue, the single most important issue facing the nation, to read the excellent paper by Mr. Cochran. Let's turn to immigration policy. No nation can tolerate uncontrolled immigration. The nation's borders must be secured, and future immigration and legal status must be controlled by the rule of law rather than the clandestine crossing or the expired visa. We must also focus enforcement not just on illegal border crossings, but also on illegal visa overstays, a major source of illegal immigration, including some of those who participated in the 9/11 attacks. But when the borders are secure and internal enforcement more effective, some one-time mechanism should be put in place to legally recognize the many individuals who have come to America to work, who have obeyed the law, who have paid taxes, some who may have gone to school in America, some who may even have served in the American military, and who seek legal status. America needs innovators and workers, and our nation traditionally has benefited from immigration from every region in the world. Immigration policy should realistically take account of the economic needs of the nation and of the reality that immigrants are embedded in our society in important ways. The proposal made by one candidate to immediately deport the millions of immigrants thought to be in America illegally and their family members would have a devastating effect on the economy, in addition to the human misery and the permanent blight on America's conscience. Cost of such a forced migration would include a major loss of productivity for American employers, as well as the economic and human cost of an army of enforcement agents. Nor would a wall address the reality that many of the illegal immigrants are here because they have overstayed their visas, possibly a figure of approximately 40%. Professor Peter Scarry, one of the nation's top experts on immigration policy, will explore in greater detail issues concerning immigration policy. Targeting disease. America also has important opportunities not yet addressed in the presidential debates. Opportunities with great meaning for millions of Americans. For example, medical research has come to the point that we may be able to much more effectively target disease through greater specific support. The national debate, understandably, has focused on access to medical care. But what if medical science has progressed on certain disease processes that a major directed effort, perhaps one disease process at a time, on cures or treatments deemed promising, could dramatically reduce the burden of the disease? As will be discussed in the Right-Sizing Government paper, basic research will be underfunded by markets because it is a positive externality in economic theory. There is then a case for government in filling this need. Our government, of course, through the National Institute of Health, already makes substantial commitments to basic research in dealing with diseases, cancer, heart disease, AIDS, Alzheimer's, and other diseases. But if the cost to the nation of certain diseases through lost work and medical payments is larger than the likely cost to better understand and cure the disease, and the science is promising enough to make that calculation, then it may be time to consider a national moonshot at curing or at least better controlling certain diseases. Indeed, perhaps if such a targeted approach is successful, the nation might target one disease after another where the science suggests that the national savings from cure or better control would exceed the cost of the basic research. And of course, a wonderful byproduct of any successes would be that millions of Americans would no longer be condemned to a lifetime of pain or disability. As an initial hypothesis for such a targeting disease approach, there is considerable evidence to suggest that arthritis and musculoskeletal diseases today meet the criteria for a major national effort. Over 50 million Americans are affected by these diseases. More than 20 million have activity limitations from these conditions, and the direct and indirect economic cost in lost work and treatment cost is estimated to be over $200 billion per year. If a major research effort were able even to cut this cost in half, The yearly savings, repeated year after year into the indefinite future, would be $100 billion per year. Dr. Stephen R. Goldring, MD, the Chief Scientific Officer Emeritus at the prestigious Hospital for Special Surgery in New York, has prepared a groundbreaking paper which should be considered carefully by all the candidates, discussing whether the cost of these diseases, the percentage of the American population affected, and the state of the scientific understanding suggest that arthritis and musculoskeletal diseases would be a useful place to start in such a national targeting disease research initiative. Social Security optionality. One of the most important papers is that by Peter Ferraro on Social Security optionality, reducing the wealth gap. It is generally understood that at minimum, the Social Security system can and must be adjusted to prevent the bankruptcy looming at the end of its current trajectory through either raising taxes or lowering benefits. There are simply fewer and fewer Americans supporting more and more retirees, and changes must be made to avoid running short of funds to pay promised benefits. The core of the Social Security problem, however, is not averting bankruptcy, but the horrible job the system does for working Americans who pay into the system. Even if Social Security continues to pay all promised benefits, the real rate of return on the taxes paid into the system still would be less than 1%. The raising taxes and lowering benefits route to Social Security reform also misses the Social Security opportunity. That opportunity is to give American workers age 40 and under the opportunity to opt into a private investment account into which their Social Security taxes would be deposited and invested and which they would own. Their investments would then compound through time like a normal retirement account. A two-earner middle-income couple at standard long-term investing returns would retire after a lifetime under this approach with an account of substantial value which they would own. Their account would pay them at least double the traditional Social Security return while still letting them leave the full account to their children if they so choose. There is no magic here. The great difference in rate of return is achieved by a simple shift from a tax and pay system to a normal savings and investment retirement system. An owned private retirement account is nothing more than the model followed by the TIA-CREF retirement system used by universities and hospitals in the United States for many years. There is no single policy change this nation can make to more effectively reduce the wealth gap and provide working families a real chance at wealth creation. Social Security optionality for reducing the wealth gap is the most obvious low-hanging fruit available to America. It is literally a kick at American workers and their families, and the worst of old thinking to demagogue Social Security optionality. Tax policy. There is a core misunderstanding about taxes in America, a misunderstanding which must be forthrightly addressed if we are to restore robust growth. The political rhetoric that the income tax unfairly favors the wealthy is not just false. The reality is quite the opposite. Our political history is one of imposing income taxes on a smaller and smaller base of the population, a path ultimately risking third world out-of-control expenditures as removal of political inhibitions on raising taxes leads political elites to support larger and larger expenditures. If we continue to focus on raising taxes as the solution to national problems, we doom the nation to subpar growth. With respect to fairness, According to the Internal Revenue Service, as of 2012, with taxes even more progressive since then, the top 1% of taxpayers pay 38.1% of the federal income tax. The top 10% paid 70.2%. The top 25% paid 86.4%. And the top 50% paid 97.2%. With a combined state and federal tax rate of approximately 50% in some states such as California and New York, the income tax is a serious drag on growth. And America's top corporate tax rate is one of the highest in the world, again serving as a drag on investment and growth and sending American corporations abroad. The tax code is also enormously complex, and compliance costs for business and individuals to file their taxes is yet another drag on growth. Further, these compliance costs are on top of the economic reality that an income tax depresses the growth as compared with a consumption tax raising the same revenue. Ideally, America should adopt a simplified flat tax system, or perhaps eliminate the income tax completely in return for a national sales or value-added tax. The recent proposals made by some candidates to increase the top income tax rate or the capital gains tax rate would slow an already sputtering economy and are neither the route to fairness nor the route to reducing the wealth gap. No one should be required to pay more than 1/3 of their income in federal taxes, a rate comparable or higher than taxes owed under feudalism. We should remember that federal income taxes are on top of state income taxes, property taxes, and a host of other federal, state, and local taxes. Yet another of the myths about the federal tax system is that it is just one big loophole for the wealthy. To the contrary, the tax code has been designed to capture revenue. Not surprisingly, while including the infamous loopholes for the taxpayer, it also contains numerous loopholes for the government, specifically designed to raise revenue regardless of their obvious lack of fairness. For example, the Alternative Minimum Tax, or AMT, which at its inception was designed to hit the taxpayer who was using abusive tax shelters, today treats all state income taxes paid as though they were an abusive tax shelter, and where the AMT is triggered, effectively removes the deduction for state income taxes paid. Excuse me? Paying your state income taxes is an abusive tax shelter? As another example, the capital gains tax applies fully to all gains, but limits deductions of losses to $3,000 per year. If the taxpayer has a good year and sells capital investments for a substantial profit, the government makes out nicely, thank you. But if the taxpayer has substantial capital losses, even to the point of being poorer at the end of the year, the government still taxes all income but the $3,000 loss, as though the taxpayer had income when her net worth actually declined. Finally, as the paper on Controlling the Deficit by Peter Ferrara shows, the federal deficit has not arisen because the nation has decreased taxes. Rather, the deficit is a product of a prodigious increase in federal entitlement spending resulting from President Johnson's Great Society programs and other more recent increases in entitlement expenditures under both Republican and Democrat presidents. Increasing taxes is not the way to increase growth, is not the way to enhance fairness, and is not the way to effectively address the low-growth, widening wealth gap. Grover Norquist, one of the top experts on tax policy in the nation, will present a paper on tax policy more specifically addressing what tax reform should look like under the next president. Let me stop at this point and see if there are any questions at all before turning to the next speaker?